Watching the market reaction or lack of it, perhaps, in some cases.
Yeah, it's a great story, and it was a lovely little clip, but nothing to do with financial markets at the moment. The dollar Korea, if you look at it, which should be the most affected, hasn't moved a jot.
We saw equities sell off a little bit on the back of the announcement that he was calling off the meeting.
The series that is 3 to 4 times more volatile than FX could have just sold off because that's what happens. Yeah. Things go up and down. I mean, that's what happens in markets.
But let's talk about dollar yen, though, David.
Oh, yeah, right. Yeah, now you're cooking with gas.
Now you're talking. All right, let me show you the chart, #BTV62. When we did see yen strength for 3 days in a row, this broke the channel support. I'm sure you love the technicals. And now we're seeing a little bit of actually a pullback in the yen, because I'm guessing markets not as concerned now that North Korea seems to want to continue the talks. In this scenario, right, of risks around geopolitics that might feed into trade tensions, do you buy the dollar against every currency except the yen?
That's actually a very good question. So what the story is, when the dollar is doing well because the US is doing well and interest rates are high and risk premium needs to go up in the rest of the world, then dollar yen heads higher and everything's fine. But when dollar yen heads lower and the US dollar is rising, we're getting to risk-off territory. And now we're getting to nervousness time. So what I really don't like seeing, to be honest, is the US dollar rising and dollar yen coming down, because that's telling you that the market's going risk off rather than we love the dollar's fantastic. Suddenly you're starting to think, I'm actually hating other things rather than just liking the dollar. And so we get very nervous. Swissie has done kind of the same thing, but we don't put Swissie anymore in the same boat as the yen. My colleague Dominic Bunning wrote a piece recently to say, look, it's not the Swissie anymore. Leave the Swissie alone. It's the yen. So the yen is the ultimate safe haven in risk off. But if you're looking for yield and you're dollar loving, then dollar yen goes up. And that's why we've kind of got this forecast of dollar yen of 110. And the reason is their forces pushing it up, their forces pushing it down. Who knows? Is it risk off or is it a dollar bull run? So if I want to play the dollar, I've got much better things to buy it against than the yen.
So if you want to look through all this geopolitics, it's all very short term, I appreciate, and it's one story one week, another story another week, David. So where do you go on that spectrum of risk then? How worried are you about? Well, how
buy the dollar. It's beautiful. I get paid. I can buy 1 year money at over 2%, and I don't have to have duration risk and wait 10 years to get like an extra 0.5%. This is spot FX. Interest rates on the short end are really high in the US. You've got 125 million of the richest taxpayers that ever walked this earth behind you to back you up. That's a thing of beauty.
And what is this an interest rate differential story for you?
Yeah, mostly it's about it's the differential, because when you say differential, it's the maximum under which I live, which is it's not only good enough that I should succeed, but all my friends should fail as well. And that's exactly what's happening in the dollar.
Very magnanimous.
The US is doing fantastically well and everyone else seems to be failing.
So, David, when people talk about concerns about yield curve flattening, right, in your view, is that actually positive for the dollar because the front-end yields are going up?
Yeah, I care about the front end. When they tell me yield curve's going up, I'm an FX guy. I don't even know what a yield curve means.
Oh, come on!
It's too complicated.
Used to be an economist. Stop it, David.
Used to be. I got sacked. That's why I used to be. No, but I'm saying it's the front end. In foreign exchange, in FX, spot rate is today. I'm not really that interested in 10 years' time. If I can get high rates right now, right here, why won't I take them? And they're delicious. They're in the United States.
And are you loving the Italy story then? If does it play to your strong dollar?
Well, you never like that kind of thing. But what I'm saying is, in Europe, you've gone from Macron, this political euphoria, back to Italy. So I think we've swung around about the euphoria, and as well, the European economy is faltering quite badly as well. So two things are happening politically and cyclically. Europe is looking worse.
Faltering or just coming off unsustainable highs?
Both.
In Europe. I mean, it's to say, I suppose it adds up to the same thing, but one's got more longevity than the other, I suppose.
I mean, look, when Europe grows at 2.5%, the wheels come off because it's too fast. So, yes, it's slowing to a more sustainable rate. But in foreign exchange, what we're worried about is expectations. Yeah. So, yes, growth is fine, don't get me wrong. But what we're saying is we were expecting a lot better. And now we're not getting it, we're disappointed. And when we get disappointed in FX, we sulk. And when we sulk, we sell the currency.
And you sell the euro against, let me guess, the Swissie, maybe the yen, but you buy it against the pound?
Yeah, I mean, that one's
I'm
easy.
just giving you your trading ideas, David.
Thank you very much. except for Swissy. We don't like the Swissy. We don't believe it's got the safe haven allure, and we think that the markets, as Dominic Bunning recently wrote, it's got this fantastic allure, but I think that's been changed quite substantially, the whole aspect of what the Swiss represents.
Yeah. With euro-dollar then as well, we've seen quite a bit of weakness this year, but given your dollar view as well, I'm guessing you see that continuing to fall, but to where?
Well, at the moment, we've got a forecast of 115, and the problem is the market's running away with us.
My chair's running away with me as well. I've just managed to drop down. I look like a... Yeah, okay.
We're shrinking. We're shrinking as we speak. David, thank you.
So is every other currency.
David, thank you. David Bloom, Global Head of Currency Strategy at HSBC.